too happy, leave my money alone. Not too happy, leave my money alone. Not too happy, leave my money alone.
Welcome to the Exchange Coffee Podcast, part of the Exchange Coffee Podcasting Network, where coffee people talk to coffee people about coffee and things coffee adjacent. The Exchange is brought to you by Kavoya Specialty Coffee, hosted by Mark Inman and Todd Mackey, and produced by Mike Ferguson. We are back from our winter hiatus with episode 37, and the topic is, no surprises here, coffee prices. Mark and Todd talk about the market, some reasons why we might be experiencing the price environment we're experiencing now, the effects on roasters, raising prices, and I jump in with some history here and there because I can't help it. For context, please note that this was recorded on February 14th when the market closed at 420 after peaking the previous day at 434. And now, here they are, Mark and Todd.
Mark, wow. Listeners, wow. Here we are, the Exchange presented by Kavoya Specialty Coffee. Mike Ferguson, Mark Inman, of course, I am Todd Mackey. It's wonderful to invite all of our listeners to join us here in, wow, what is a very, how would you describe it, Mark?
We are in uncharted waters.
No. Charted. Not recently charted waters.
Not recently charted,
and
yes.
Mike is going to be our guide through history because there's a lot of non-truth out there in specialty especially, but in the market total, saying that we are in completely and truthfully uncharted territories, but we're not actually at market highs.
No, we're not at market highs, but I do believe the reasons for where we are, my hot take today, why we're here is very different than in the past where we've jumped up.
Of course. But before we get into all of this,
yes,
how do you feel? That's what I was trying to get at. We are in enter descriptor, emotional descriptor here. I'm pushing Mark Inman to detail for our listeners his emotions.
Oh, I mean, I am constantly stunned and amazed with what's going on right now. There is not a day where I feel like it's just a regular old day. That emotion is gone.
Yeah, I mean, the emotions for me, because you asked, thank you, are range from like, I think awe is a really significant one. Yeah. Where I'm reminded how small we are as participants in this thing that is just massive and plays out according to lots of factors. And then there is a lot of fear and a lot of anxiety. There's obviously a lot of fear and anxiety and other stuff going on for participants, roasters, producers, exporters. You know, I mean, it's a spicy soup we've been swimming in together. So how are you feeling, Mike Ferguson, as we are going to be drawing you significantly into this episode?
Well, you know, my soapbox is inflation, whether we're talking about coffee prices or we're talking about cost of living increases. You know, I'm pretty vigilant about making sure that inflation is acknowledged. And in this case, how I feel is frustrated at some of the headlines, especially when they're just not followed up with even a footnote. And while I agree with Mark that the circumstances that are leading to these prices possibly are highly asymmetrical and unusual, I don't think they're unprecedented. I think that we're looking at something very similar to 77 when you look at geopolitics and unrest around the world and logistics and whatnot. So I just, my feelings, I get my hackles up when someone goes for the headline and says record setting. You know, I think for a number of reasons. First of all, I think unprecedented conveys uncertainty, and which is difficult to manage on both operational and emotional levels. When you say unusual, it conveys the idea of survival. And we have survived. Coffee survived for hundreds of years. And these specific circumstances, Napoleonic Wars, the American Civil War, the early 50s, 77, 14 years adjusting for inflation above $4 in the 70s and early 80s. So, yeah, we survive. Ba-dum-bum.
So Todd, overall, I see this long pause into the microphone. Taking like the threat of tariffs out of this and the geopolitical issues that we're facing right now, since you and I and Mike got into the coffee industry, what we have been saying all along is that coffee is an unsustainable bargain. It has been for decades.
Ridiculously.
The fact that you can drink the finest coffee in the world for under $1 a serving, far under $1 a serving, down into the 25 cents a serving, is ridiculous. And we've been pushing in our careers to get producers higher wages, fair wages for their coffee. And now we are at a point where this becomes economically feasible for them to farm coffee. And I believe my hot take here is the days of a $2 market are over. They're over for a couple reasons. One is climate change has made coffee difficult to grow in certain parts of the world, at least certainly unpredictable to grow in certain parts of the world. And in Central America, where coffee is still picked by hand, people don't want to do that type of labor for those types of wages any longer. So they're having to put money forward to have the coffee harvested properly. I believe that we are looking at a new floor being established that is a permanent floor and has nothing to do with tariffs. It has nothing to do with speculators in the market. It has to do with supply and demand and the environment. And this is where we are to stay. And on paper, in certain parts of the world, it is now economically interesting to get into the farming of coffee.
Yeah, no, I mean, there'll certainly be a macro response, globally speaking, I would think, even as you aggregate small investments, relatively speaking, across like the global base of coffee producers. You know, if everyone is producing 20% more, I mean, that is a significant amount of coffee that's going to come to market, theoretically speaking, let alone if we see certain national interests, something similar. Mike, you might be able to detail for the listener a bit more of the impact of Vietnam emerging as a producer of low quality Robusta coffees and what that did to the market in the early 90s. But, if there's governmental incentives in countries of origin that are, current countries of origin or, countries that aren't even online, as climate shifts and allows for countries to see opportunity as a potential producer. I mean, there's certainly going to be something like that, but that's a future moment,
right?
That we're sort of, imagining. I guess one question to tie those together, to tie your hot take to that future moment, is what happens in that type of situation. I mean, the history would tell us, and Mike, cut me off and jump in, that at that point when the market brings more coffee and supply outpaces demand, that of course we're going to lose the price floor that you're talking about. Do you?
I don't believe there is going to be this giant flux of coffee coming to the market. I think that we're going to constantly deal in some part of the world with drought or an issue that limits yield from a certain country during a certain harvest year, and other countries may have more to offer, but it's going to be offset by those that don't have even their adequate production to offer. I find it interesting that for the past 3 years, Vietnam has slowly been exporting far less coffee each year on a steady stream for 3 years now. Now, they may return given this new market condition, but they've been exiting for a while. And if you look at the world, global production, you have Brazil as king, then Vietnam, and then you go way down, and then you get Colombia. So I just don't think we're just going to fill that vacuum that Vietnam is leaving us with Central and South American coffees or even East African coffees. I think it's going to take a lot of effort. Now, Brazil is planting like crazy, and they may bring a lot to the market. But you do have consumption. It's very strong, and you have consumption because of RTDs and other products coming to the market that aren't your traditional hot cup of coffee that are increasing coffee consumption. You could look at the super high caffeine energy market with like Death Wish and all of these brands that are going after people that would be drinking Red Bull normally. These are avenues that existed on really minor landscapes 10, 15 years ago.
The Union Army starts buying enough for every soldier to have 30 pounds of coffee a year, and demand just spikes, prices go way up. Everybody goes out and plants a bunch of coffee, and the prices fall as soon as the war's over dramatically. Right. And so this repeats, throughout history. The Starbucks in the mid-'90s opened up stores like crazy. We're doubling the number of coffee houses every 2 years in operations. Prices go up. Vietnam comes into the market, and we go into several years of abyss. So I think the ability for coffee farmers and producers to go out and plant more is limited compared to history for all the reasons that Mark pointed out. Even in some markets, it wasn't about planting when low prices and parts of the farm were abandoned. It was just about better husbandry, going in and recovering parts of the farms. That may even be, if there's just no flowering or whatever is happening because of climate change, better husbandry is not going to help. So my open question going forward is, the ability for producers to respond to high prices by planting more.
Right.
Yeah, but wouldn't you see coffee? Coffee by and large right now is a dry agricultural product, right? Like, not only is it it's not like precision farming and all of these kinds of advancements in technology behind farming of all sorts of other food crops. Not only is that not addressed in coffee, but but we're talking like fully dry, meaning completely subject to whether there's even rain or not. Wouldn't there be a point where the value of coffee, if it's stable enough and high enough, where there could be that amount of interest in, hey, we can actually optimize these farms, we can explore more stable irrigation, precision farming, and fertilization techniques, and all this kind of stuff that right now we don't even talk about as a possibility because the product has been perceived as not on that level. There's a lot of potential not to lose the plot on climate change as a huge challenge and an unpredictable one, which I 100% agree with. But there is also this place at which, especially in an industrialized farming situation like Brazil, where these practices are, I would imagine, soon to come into play. I don't know, from a farm standpoint, I'm not being a farmer, I don't know the economics or where that break-even point is, but at a point, it's got to be there. It's got to be on the chart somewhere.
You're saying what's the tipping point?
Yeah, at what point does a farm, at what size and volume of production does a farm in Brazil net enough to warrant those types of investments?
I would argue in Brazil that's been happening all along. If you look at most of them mechanically irrigate, unlike many other parts of the world. I think that this market is going to push the sophistication level in Brazil through the roof. Technology is going to play a huge role in advancing Brazil's quality of coffee. I think in Central and South America, where they don't have as much technological advancements because of the terrain that coffee is grown on, once roasters become comfortable, and I think roasters are in this state of shock right now, not knowing what to do, but once they get comfortable with this is the base and this is where my prices are, and they've raised their prices and they're making their profits, they're going to become more demanding on quality. So this may spark the revolution in quality that we've been asking for decades, because the ability to make those investments are all of a sudden possible. I'm assuming by your silence you accept my premise, Todd.
Yeah, no, I think it's all. I mean, this gets us back to the top of the show.
Yeah,
dear listener, right? Like, to your initial statement, the range of factors that we're experiencing, obviously they're the factors we're experiencing. One of the historically relevant notes that's important to talk through is that, like, by and large, most, if not all, of the current sort of stalwarts of the industry have not been around in what would be the most directly comparable market scenarios.
Right.
We do not have, we were not trading coffee in 1977. You'd have to have been trading in 86. I was 4 years old. You were 32, Mark, but
I was on my near retirement. No, I was in 86. I was in the military. So yes,
you were stationed in Reykjavik, right?
Keflavik, yeah, right below Reykjavik.
I'm so sorry.
Yeah.
But yeah, so I mean, joking about age, of course, as it's become a little bit of a theme over the years that I always like to imagine our listeners have fun with. But yeah, so it's important to note that, just to say, I'm sure there was a myriad of factors that the charts don't reflect.
Right. And
even good historical analysis and great historical analysis, like the stuff going on in Mike's head. But this is also very complex. It's very complicated. And, I think all these points are true. I'm not looking to simplify this to one factor and make an argument or try to talk you out of your hot take, Mark. That's for sure.
Oh, no. And I think when we start to bring in the other factors, like the geopolitical situation we have right now, shipping issues, the inflationary rising cost of everything else like a cafe owner is dealing with. I mean, beyond coffee, it's paper goods and packaging and straws, and is it paper straws now or is it plastic? What's the political climate for straws, and tariffs potentially out of coffee producing countries. I heard something like Mike touched on earlier about the giving kind of a half of a fact is they were talking about tariffs at the White House briefing because coffee would be included because, hey, we produce coffee in the United States. We produce it in Hawaii. And when you look at that statement, that is saying that, the U.S. Coffee farmers, should have a competitive edge. So let's tariff, coffee producers in other countries. Hawaii produces 17 million pounds of coffee. That doesn't even satisfy California. I mean, that's a joke to say that we have a meaningful coffee producing population here in the United States. We don't. But let's just say that they're going to go after tariffs, in Mexico and Colombia. That would throw even the market even into a crazier price tier.
Yeah. So, I mean, beyond this, I mean, we have the direct geopolitical impact. We have the indirect, the sentiments within the market where, for all of the pressure that's been created, and, it's not like I'm going to get you back, but I would imagine as a producer, a long kind of well-deserved opportunity to have a high price. There is certainly no goodwill coming from a lot of, leading consuming markets in this type of scenario, namely the U.S. for what stir it's creating. But that's not what this show is about.
No.
Yeah, I mean, there's also at the same time huge impacts for how the market has risen, the rate at which it's risen, and the amount of pressure that it's created, not only on credit lines because of coffee, but because of margin calls for the purpose of hedging,
right,
and reducing risk. And we're seeing the beginnings of an inability on the origin side to facilitate these really massive and acute kind of purchasing cycles to get coffee afloat, to get it out of the country. My general feeling is like we could see within 6 months, certainly longer if the market persists, but we could see a shift from coffee being available in consuming countries to coffee being available most expressly in countries of origin. I mean, do you agree with that? That's not a hot take, I would necessarily say, but if there's one thing that I'm like, I would bet on, it would be that coffee is going back to this position where, people are like buying spot Santos and spot Rio and,
right.
It would seem like it would have to.
Oh, no, I think you're absolutely right. I think you're already seeing that happening. The capital constraints at origin to meet margin calls are significant, so much so that most importers have pulled out of participating and buying in those markets right now. So you have lots of coffee at origin and you have limited coffee here. And from if you're a roaster, I cannot emphasize this point enough. When you look at, so the market switches, like we're switching today as of the recording, we're leaving March and going into May. And the difference of those two prices is like 16 to 18 cents, what they call switch cost. What that means is if I'm an importer and I have $1 million in inventory sitting around on my spot list, it's worth 18 cents less per pound the day it goes to May. And then when it goes to July, it's another 18 to 20 cents less per pound. I'm losing money by sitting on coffee in hopes of trying to entice you, the roaster, to buy it. I bought some Colombia. I know I have so many roasters that like it, but while it's sitting around, it's losing value. There is no incentive for importers to carry a lot of spot coffee right now because they're actually losing value. So you're going to see this year a significant shrinkage of spot coffee availability for the small roaster. And what we call back-to-back business, which is I need a container of Colombia, I buy it from Todd, Todd brings it in. That is the business that's going to be happening more and more, and far less of, hey, I need a pallet of Rwanda. What's the price today at warehouse? You may or may not have that available to me.
Yeah, 100%. Yeah, I think it's going to be that, along with, the pressure to take coffees faster, the need for, what has classically been, the export-import, middle of
right.
the industry hourglass, let's call it, has financed both directions. And in this type of financial environment, it cannot. Right. And so, it's there are countries, potentially even listeners to our podcast, that are in places where that is not the case. A market like Australia, I understand to be very different
right.
than the U.S., for example, and I know Europe as well. Is the degree to which the typical roaster is taking on, whether directly or indirectly, their own, financing of their inventory. But in North America, for example, I mean, it's the whole roaster, industry is set up on the importer or an importer behind the coffee merchant that is financing the whole thing for people.
Sure.
And, that is also a massive, place of change, let's call it, as we see it coming down the pipe.
Well, it's also a place of change because of the restrictions that the roasters are experiencing. So, for example, if your importer, gave you a $20,000 credit line, that's what they're allowing you to buy in coffee. Last year, you could buy double what you're allowed to buy today. So as a roaster that's growing, well, I got to first get back to normal to get to my normal volume. So I got to find somebody else to give me an additional 20,000 because most importers aren't increasing their credit lines with their customers, or if they are, it's very little. And so they're having to find more credit to stay equal. And then if they have any growth aspirations, they have to find even additional credit facilities.
Yeah. Let's not miss this. I think this is an interesting opportunity. I mean, you're obviously getting this question from your customers. I'm getting it from mine.
Right.
But to Mark Inman, like, what represents a reasonable roaster customer to actually be that resource for, to raise that credit line right now? What do you require? What are you looking at and saying, I'm saying you just because I'm putting you on the spot, but like, for example, what makes Kovoya say this customer is worth raising this credit line for, amidst all this risk?
Well, there's some simple right out of the gate factors that they look at. One is payment history. Have you been paying your invoices, if you have terms, on time all the time? If you have, that's a plus sign in your plus column. Second, assets. Do you own the building that you're roasting in? Do you, own a fleet of trucks? Do you have, a multiple plants or a distribution facility somewhere else? That's another plus in your column. What's your growth rate? Do you have stable customers that, nationally recognized grocery chains or hard contracts that you can show? That would be another plus. That would give somebody the safety to give you an additional credit line, including your credit check. Your credit rating comes out favorable. But if you're a roaster who and look, as a roaster, I did this, so I'm going to take the bullet right here. I used to use my importer as a bank, and net 30 was a suggestion. Sometimes I'd pay net 30, sometimes I'd pay net 60, and I would use the importer like my bank that didn't seem to give me late fees, and I was able to goof around like that. But when the market gets to where it is today, if I were to go to them and ask for more credit, they'd say no, because my history with them was mediocre at best. And so anyways, those are the factors that I see if you want to increase your credit line. But I think even if you have those check marks, there's going to be no more no's than yeses.
Yeah, no. Realistically, we are seeing the ceilings
right
from where we sit. So, Mike, we're meandering through. I have to imagine that you want to pull this a certain direction, given all your work on the subject these days.
No, I mean, I don't want to belabor any points. That I would say that there is a sort of, however, after I get off my soapbox on the inflation, as soon as we hit 431 the other day, we were in what could be fairly described as unprecedented for the specialty coffee era, because you'd have to go back to December of 86. I don't like to look at single days. I mean, I know that other people have to worry about that minute to minute maybe, but from a historical perspective, I like to take date ranges. So if you go back to, let's see, it was November 22nd when we first broke $3 through now, the average price over that period is going to be something like $3.35. So then you've got about 150 days in 2011 and about 130 maybe days in 1997 where we experienced the price environment that we're experiencing right now. So that's just that, again, I guess I am beating a empty piñata at this point, but I like to contextualize with inflation. Other than that, I'm sort of fond of saying don't panic and raise prices, or stay calm and raise prices. So if you guys could talk a little bit about that, because you both have experience on the roaster side on how to raise prices, but specifically, I mean, in general, but also the whole idea of pricing on replacement. which I think some of our customers may not be. They're used to this model where they're looking back at their costs, the cost of the coffee, and they're adding their margins and their costs and whatever, and then that's the price of the coffee. But that's not.
Yeah, no, absolutely. I mean, one thing I think has come up in almost 100% of the conversations I've been having in 2025 is that, price adjustments it's not if, it's when and how. And, you have to, even if you are enjoying stable pricing from previously booked contracts, to your point, what it is going to cost you to go and replace the coffee that you are selling today is not going to be comparable to what you've bought as of, fall 24, summer 24. And so it's critical, especially not knowing the future and not knowing how long, this price level will be a factor. It's essential to, recognize it and actually base pricing off of what it would take to replace the coffee in your inventory today. And that's what you're talking about when you call it replacement pricing. This is the hardest choice because, we also see an environment where roasters right now can, if they have a good amount of stock, whether in-house with them or in-store with a supplier, if they're well set up with inventory, it can feel like a huge opportunity to undercut folks who have no choice but to raise prices immediately. And so, while that is a choice to make, I mean, the factors, to Mark's point, are pointing in such a direction that this is not like a moment, and how long this season persists, whether it is, $4 is the average market. I mean, we can't tell that by now. I mean, we're going to see that as time lays history out and we look back in years to come. So yeah, really. Go ahead, sir.
I was going to say, but we do know some certain things right now. So one of the things is roasters that I was talking to in November when the market was rallying, they're saying, well, I have enough coffee to get me through to June. I'm covered. I'm going to weather the storm. There is no piece of data that indicates that this is a blip and a drop anytime soon. The only relief that could possibly come to this market is news of record-setting rainfalls for the fall in Brazil and a bumper crop for 2026. That would send the market south. But we won't even learn that until June. So between now and June, there's nothing. There's coffee stuck at origin. There's capital constraints on some of the largest global players in coffee, let alone the mid and small size roasters.
Absolutely. Yeah. No, it's not going to be something. I mean, if the sales pitch is, my price is holding firm. I mean, it is something that is not only going to do your business wrong in the moment, but it will literally be your undoing when you have to go, groveling back to that same customer and tell them you were 100% wrong.
Well, and the depressing story I've had from a lot of roasters, back in November, they went to their large customers and did a price raise, thinking that, that was the raise.
Yeah.
That was the spike in the market. And then it kept rising. And they're like, I have to do this again. Like, how embarrassing is that? Always when you talk about replacement costs, think about a buffer. Don't just do it at where the market is today. This thing could keep going. So give yourself some breathing room in there. And they did not. And it's far more difficult. It's really anxiety provoking as a roaster to do a price raise because you fear you're going to lose the customer or, customers are going to drink less. And none of that ever happens, but it's still a real fear when you do it. Imagine going through that twice in a year or 3 times in a year. That's just unbearable. So yeah, unfortunately, just like these little tiny raises, thinking they're just get you by or it's enough of a Band-Aid, you can't think like that. You have to think about what's a sustainable price for my business model. That's what I need to get. And, there's very few avenues for the customer to turn other than you. Everyone's raising their prices. Nobody has some secret hack that they're getting their hands on cheap coffee right now.
Yeah. No, and I will say simultaneously there's more support in the news and, in mainstream media that is available. I wouldn't say it's like, leading news with all the other crazy stuff going on, but it's certainly there and can be pointed to that, broadly speaking, like the world is aware that coffee prices are under extreme pressure. Right. And so, you have to use this as sort of an opportunity and a launching point to at least address what which is, our last 6 months of surge. So, yeah, I mean, it's interesting that the whole concept, like, you're talking about fundamentals supporting the market and how until we get news on the 26 Brazil crop that tells us it's not going to be as bad as expected. Right. Or when we get news on the 26-27 crop, which is going to be, late summer to fall of this year, right? That's going to be huge, right? We really have nothing that's going to come in and tell us, hey, it's going to be okay, things can ease, and so on. So, the only other way that the market will sort of ease itself is in demand destruction. And so, my question is, what do we expect? Where are those thresholds? At a point, people are going to certainly, at the least, if you start to look at maybe less relevant to specialty roasters, but if you look at the kind of places where coffee is there, it's free and it's ready. Right. Right? Right. Places that comp coffee, hotels, auto shops, institutional places that are like, hey, you can come in and while you're waiting, there's coffee, right? They all that together, if you bundle that together, that is a lot of consumption. Right. And like my inkling is, hey, well, things like that will change, right? What's next? You start to see people who they buy beans and brew coffee at home. Maybe they made 2 pots in the past. Maybe a portion of that second pot gets wasted. People start to really be mindful about how much they're making. Hey, you know what? Instead of 2 pots, I'm going to make 1. I'll make sure not to waste it. I'll just drink it till it's dry and, nothing gets wasted type of thing. Right. Retailers who start potentially getting creative and experimenting with brew ratios that favor lower throw weights, right? All of this, compounds, right? So we have some space before it's just like, hey, am I going to go whack like a pour over of geisha or should I have another Diet Coke, right? I don't think we're in that situation. Oh, no, not even close. Although I would ask Mike, the historian, are you going to see a resurgence of chicory? Or Mike, there's correlations historically speaking to like soft drinks with caffeine and market highs. Is there not? Yeah, the rise of soda in the 70s, but it's due to 2 things. It was not only high prices, it was coffee tasted terrible at the time. There was a time in, I think, 73 where consumption of instant coffee and brewed coffee were almost neck and neck. It's because they tasted the same. So, there was also a quality problem. But even in the middle 70s, 77, when one day coffee peaked at over $17 a pound green, even in those days, consumption only dropped 15%. Right. For consumers. Grocery store sales only 15%. Now, roasting production dropped 35%. But on the consumer side, just talking about not talking about how roasters adapt or don't. On the consumer side, people don't drink less coffee. It's a very small margin, relatively speaking, 15%. They just switch it up. Brew more coffee at home, start going to a different store, buy coffee off of a different shelf at the grocery store. The $14 a pound coffee and the $4 a pound coffee are only like knee level apart, in the grocery store. So and they're both labeled the world's best coffee. Yeah.
Oh, Arabica.
It gets us back to the days where, everything is boasting 100% coffee on the ingredient list.
I do have a couple points of advice in terms of raising prices. The first one I call The Cat is on the Roof. And this is an old joke. A man leaves his cat with his brother to babysit while he's on a vacation. He calls, "How's the cat?" "Sorry, brother, your cat died." And the guy's like, "You can't, that's not how you break bad news. You tell me, hey, the cat's on the roof. I can't get it down. The next day you say, well, the cat fell off the roof. It's at the emergency vet right now." And then the next you say, "Sorry, brother, but the cat passed away." And his brother says, "Okay, I understand. You're right. I'm sorry." And then the guy who's on vacation says, "So anyway, how's mom?" And he goes, "Oh, she's on the roof and she won't come down." So you just okay. So we want to help. You want to help your customers. Retail. You think your business is hard. Retail is insanely difficult. So you don't want to have an invoice show up with a footnote on it that says next week prices are going to go up 10% or 15 or whatever it is. Let them know, hey, things are really tough. The merc is really high. We're looking at raising prices. Over the next whatever it is, over in the coming weeks. Okay, and then ease them into it. That way, give them time to plan, give them time to adjust, even if it's just on a psychological level. Another thing I would say is empathize, don't apologize. Certainly empathize with your customers when you're communicating about, understand this is difficult, but don't apologize for being a business person and aligning your prices with your costs. And then, of course, whenever possible, with your key customers, these don't necessarily mean your largest customers. You might be talking about legacy customers who don't buy that much coffee but have been with you since day one. Whenever possible to have a personal conversation, make sure you do that.
Yeah. No, those are great pieces of advice. And
going to be a lot of people talking about cats on roofs.
Yeah.
Todd, do you think because of that, you're going to see the reduction of roasters in the United States, companies? Do you see a big wave of that happening?
I hate having this conversation.
Right.
I think I might just say, no, I don't want to have this conversation, Mark. But unfortunately, I feel like that's also part of why we're here. So,
right.
Yeah, I mean, I don't necessarily want to respond and cast like a vision, if you will, over, how it looks. I know that, there's a fair number of roasters and retailers alike that have come through the COVID pandemic, collected a fair amount of capital through, government assistance and programs that, that were significant enough to, transform the situation for not just, a moment, but for even calendar years in some cases. And, the general sense that I was getting in the last 6-12 months was that, some of those impacts, those positive impacts were coming offline and people were starting to, if they were, not set up or had suffered some, unrecoverable losses in the years prior, sort of on really shaky footing and, seeing really the real impact of how everything shifted in that time. And so, yeah, long story short, I mean, I feel like there is a very vulnerable segment within specialty that, coming into this situation had either discovered or, somehow had yet to discover a hole in the bucket, so to speak.
Right.
In their business. And with those types of vulnerabilities going into what is, a challenging time, to put it as kindly as possible. I mean, I can't imagine that there will not be issues for companies ahead. I know we're already hearing of, here and there, we're hearing of companies that are succumbing to, I don't think at this stage it's just the high market.
Oh, no, not at all.
I think it's going to take time, but certainly I think if you're exhausted, if you're, up against the wall and then this happens, it's like, how do you find the resilience to continue? I mean, that's a very hard existential type of situation to find yourself in. So,
right.
I hope that is an insignificant percentage of, folks in the market, participants in the market. I hope that is not a common experience. But I think it's one that we have to be aware of and vigilant of. I think roasters have to be more savvy than ever to like get a window into their customers, their retail customers' business, whichever way you can to, have the hard conversations, earn the hard conversations by, creating a rapport like Mike is talking about. To where as challenges are faced, this is not something you find out later about, when you've already overextended, product on terms, and you've already overextended your credit out to these, to challenging customers. Retailers are, in it and going to be in it even more, and from all sorts of angles with, with the climate that they're facing, not only from coffee, but from all sorts of goods.
Sure.
So I don't know. What's your take on that?
Well, I mean, it's the old adage, adapt or die. I think that it rings true to this moment in time in coffee, and as glib as that sounds, I think what that means to me is that those that usually crash in these markets are those that resist and not adapt. They think that they could weather the storm until they can't. They want to be attractive by offering something that nobody else is offering in a certain market condition, and that's their demise. Versus spotting the opportunities. In every market, there's an opportunity, and if what Mike said earlier is true, consumers, in the spirit of saving money, may be brewing more coffee at home. If you don't have a solid whole bean home program, get one going. I remember reading an article a few years ago. It was written. It was about the New Zealand market, and it was the article was titled "The Case for the $12 Cappuccino," and it broke down why shops in New Zealand, the economics pointed to a cappuccino should cost $12 a cup, and they were only charging $8 a cup, and this is why this doesn't work. And to try to get the consumer to understand the cost involved in putting these things together, not just saying, whoa, $12 for a cappuccino, that's outrageous. But when they broke down the cost of dairy, the cost of labor, the cost of cups, the cost of their leases in these locations, that's what it took to be a sustainable business. And I thought that was a great article that every cafe should put up and talk about with their customer base. And the way to survive this is to be very transparent and have that relationship with your customer base to get them to understand what we're up against and create collaborative efforts to get through this moment in time. If this is the new floor, then maybe you're not only drinking coffee in the cafe anymore. Maybe you're drinking it partially at home and partially in the cafe, but the cafe should be a part of that dialogue. And I think that's going to be the best way. But I think any other way of just not wanting to do this, or being slow to adapt, or understanding at the end of the day you're a business and you need to bring in a certain amount of income to pay for your fixed costs. And if you're not currently bringing in the income, you have to pivot quickly, or it will be the end of you. I think if people pay attention to that, they'll survive. But if they don't, the demise is almost certain. Yeah,
according to the NCA's Drinking Trend Survey, the vast majority of daily coffee drinkers self-report as being dual coffee drinkers, meaning they drink what they perceive as commercial-grade coffee or traditional coffee, and they also drink as what they perceive as specialty coffee. So I think there's an opportunity to be, as they perhaps, the percentage of each begins to shift, to be a part of both.
I mean, I always thought it'd be interesting to have a coffee, like there's always coffee houses that call themselves like the New England Coffee Exchange or whatever, to actually have the market price printed in your cafe and have your prices fluctuate with the market in a true form. I think that would be an interesting business model.
Yeah, this is absolutely 100%. This is my hobby horse. Another one is that, we don't do coffee drinkers any favors by letting them forget that coffee is an agricultural product,
right?
And is subject to the whims and wiles of nature and a number of other factors. I walk into the grocery store today to buy eggs. I have no idea how much those eggs are going to cost. I have no idea how much a ribeye is going to cost, or tomatoes. I might have a sense based on what I paid last time, but if it's different, I'm not going to be surprised. And yet, people walk into a grocery store expecting their coffee to be stable, the price of their coffee to be relatively stable relative to the outside aisles of the grocery store. And in terms of always communicating, this is one of the things that I think roasters should always be communicating to their customers, just like we should always be communicating to ours that coffee is an agricultural product. Prices will fluctuate, sometimes wildly, just like everything else on the outside aisle.
Right.
And for God's sake, if I had a grocery store, I would put the coffee on the outside aisle in the produce section.
Oh, absolutely. I mean, it is weird. And again, it's one of these things I'd love to pick your brain about. How did it end up in the middle aisle with this idea of a set price? I don't understand why, because none of us have ever dealt with coffee as a set price good.
I mean, I just don't think. I mean, I grew up in a family that it was powder in a can, right? It wasn't even. It doesn't even reflect. It's kind of like chocolate. Like, I mean, it doesn't even reflect. Like, it's a finished good. It's not an ingredient.
Yeah, it's the consumer mindset's been around forever. When coffee was like a nickel a cup for 30 years.
Right.
In 1954, green coffee, the floor price for green coffee hit $8. And the roasting sector started to respond, and Congress held hearings because coffee drinkers felt entitled, to cheap coffee. It's just in the mindset of the culture.
It's probably the same. I mean, looking back with tea, right? Very similar, where it's like, hey, I could go without bread, but I'll be damned if I don't have my nickel cup of coffee.
Mm-hmm.
The price of coffee in real dollars has gone up 15% in 52 years. And adjusting for inflation, it's gone down over 52 years. Now, these numbers are real dollars. I'm not adjusting for inflation. On July 6, 1979, coffee closed in New York at $2.15. On May 12, 1986, coffee closed in New York at $2.15. On October 5th, 1994, coffee closed in New York at $2.15. April 21st, 1997, December 16th, 211, October 8th, 2014, May 12th, 2022, April 11th, 2024, coffee closed at, guess, $2.15.
Yeah,
that's why I believe we're seeing the new floor. I believe it's finally catching up to us.
It would seem to have to. Yeah, well, I mean, I imagine that as, the year continues, I would guess, my projection is that we're going to have more than just this episode as we detail, these conditions, and as we start to see, things unfold looking ahead, and, that does, that adds a bright spot on the calendar in my mind. Lots of great resources to our listeners who have not yet checked out our blog. Mike has created a number of pieces that are pretty awesome reads, and certainly would enhance and support any dialogue you might be having with customers that are challenging to communicate with in these times, or lack the sort of pliability, to adapt along with you. But check those out, Covoy.com, and you can find our blog. But yeah, to everyone who's tuned in, thank you so much.
Leave my money alone. Not too happy. Leave my money alone. Not too happy.
You've been listening to the Exchange Coffee Podcast, part of the Exchange Coffee Podcasting Network, brought to you by Kavoya Specialty Coffee, where coffee is always a collaborative voyage. The Exchange is hosted by Mark Inman and Todd Mackey and produced by me, Mike Ferguson. Our free use music for this episode is Leave the Money Alone by Carvet56. Remember, you can always email me at mike.ferguson@kavoya.com. Thanks for listening, and now your postscript.
Yes. espresso martini, Mark? We're really that's what did it.
No, that's not what did it. But
Espresso martini. How's that for a headline, Mike?